Brought to you by Xander Insurance. Compare rates from top term life insurance companies in seconds at Xander.com.
Bit of a situation me and my wife are in right now. We're first-time homeowner buyers trying to purchase a home. After doing the math, the first 3 years of mortgage comes around to 45% of our monthly takeaway income after taxes. The area where the house is being built is really hot right now. Everything around is being sold. Major developments going on in that area. But I guess we're just in two separate minds about, do we take the plunge now or wait a year and then maybe the price goes up even further and then, we're just stuck in the apartment.
Why did you say it would only be that much for the first 3 or 4 years?
Depending on how the loan is working out. So we're doing the 2-1 option. So first year.
So this is not only 45%, it's an adjustable rate 30-year mortgage.
Right. So if you're taking the average, I guess from the third year onwards, it's going to be.
You don't have any idea.
It's
called an adjustable rate mortgage.
Yeah.
It's
Jerry,
going to adjust. You don't even know.
How old are you?
28.
What's on fire, dude? That would cause you to
be this stupid.
Yeah. Yes. What Dave said.
No. The mortgage is going to be $5,200 after the third year for the next 30 years.
Yeah. So what do you guys make? I only recommend term life insurance because it's simple, affordable coverage, and you should get it only from Xander Insurance because they work for you, not the insurance companies. Xander compares all the top term plans to save you money so you don't get ripped off with insurance that they market like a so-called investment. Term from Xander is the only life insurance I would get from my family. It's all I've ever bought and all I've ever recommended. Go to Xander.com or call 800-356-4282. So what do you guys make?
We take home $11,250 after taxes a month.
Okay. And do you think your income's going to double in the next year?
No.
Then don't do this deal. It's asinine. You are signing up. You're signing up for some financial suicide.
The truth is, and earlier in the show, we had Brian Buffini on, and we were talking about this very thing, okay? Real estate, I get it. It feels very expensive. Sometimes it feels out of touch. Sometimes it feels like it'll never happen. But that's not true. However, your time horizon for when it will happen may be different from what you expect.
And your neighborhood might be different from where you're
That's
expecting.
Also true. You said it's a very hot neighborhood. They're building.
You may not be moving
like
into that neighborhood. You obviously can't afford it.
So what would it look like to look in a different neighborhood, or what would it look like to just change your expectation a little bit? Because to put yourself in a situation where you're at 50%, for you to be trying to convince us that that's a good idea.
It's not sustainable. You know, everything that comes up, because you don't leave enough room in your budget because you're what we call house poor. You're signing up for poverty, and everything that comes up that you guys want to do or need to do that you don't have room for in the budget is going to be new debt. And so you're going to run up a pile of credit card debt, a car debt, and you're going to run up some other debts here and there because you pinched yourself with this house payment. And let me tell you, the way the indexes are set on adjustable rate mortgages, they're set, the interest that they give you going in is a bait and switch because it's not even covering the index, meaning if interest rates don't go down, interest rates would have to go down for your payment to remain the same. So there's a very high likelihood this payment's going up substantially as soon as it's ready to adjust. And so you've signed up for a rat in a wheel that's skinny. That's what you've signed up for.
And let me tell you something else, Jerry, because we get this call all the time. You're married, probably newly married, yes?
Mm-hmm.
What happens when you decide to have a baby? And what happens when suddenly a wife or a spouse decides to stay home and say, you know what, I want to stay home with the baby?
Can't.
Now you are locked in.
No, you can't.
And so the best advice I can give you is to think about that future
Oh,
now.
and you can't afford daycare either.
Yeah,
there's not room in the
that's what I'm
budget.
saying. You're not. There's no foresight here, and we're here to help you with that. You
Yeah,
got to think about daycare.
You guys are so desperate to buy a house in that particular neighborhood. You got house fever, and you need to go take a cold shower.
Yeah.
This is a no. It's a hard pass. No. And it's not because I don't want you to have a house. I don't want the house to have you. This transaction is going to screw up the next decade of your life minimum if you do it. You can just go back and say, the mean old nasty guy in Tennessee told me that this was going to screw up my life, and he was right. You can remember that if you go forward with this. Please, son, I love you. Please don't do this to yourself and to your new wife. You're signing up for trouble. You can't afford to live in that neighborhood today. We know that because you had to put it on a 30 and you had to put it on an adjustable, and it's still too high a percentage of your take-home pay. There's nothing in this formula that makes sense. Everything in here screams, don't do it, including me over and over. Was I unclear?
You weren't, and we don't even know, Jerry. You didn't tell us if you have no other debt. My guess is you probably already have other debt.
Goodness. Yeah, so we're not the cosmic killjoys here. We're trying to keep you from signing up for what you think is a dream, and we're real sure it's a nightmare.
No, it is.
That's all it is. We just want good things for you, brother. I want you to reconsider this and not do it. And then I want you to back up, pan back, zoom out, start looking further out, look for something a little older, get your foot in the door on home ownership after you're debt-free, have an emergency fund, and you put down a good, strong down payment, and you buy a fixed rate 15-year where the payment's no more than 1/4 of your take-home pay. And so the translation is it's going to be a lot less expensive house than the one you're looking at. It's not going to be nearly as cool as the one you're looking at, but you're brand new, married in Dallas, freaking Texas.
And for new couples, that's some of the best advice that I can think of, what Dave just said. And think about what your life will be once you have children, because most, I'm not saying this for everybody, but most people get married and they plan on having children. And daycare is expensive. If you have 2 kids, you're at least spending $2,000 a month on daycare. Think about that now. Think about does somebody want to stay home? Could that possibly be in the future? Because a lot of times we say, no, I'm going right back to work, and you don't know what you're going to do. So please consider that, because I hate those calls, Dave, when they call in and they feel like they're between a rock and a hard place because there was no foresight on really what they wanted their life to look like in the future.
Well, it's all becomes about the house fever.
Yeah.
And it's got to buy a house, you got to buy a house, you got to buy a house. Everybody's got to buy a house, and everything makes sense if you buy a house. It's the same stupid thing that we sign up for with education. No matter what it costs, I got to go get a degree. No matter what it costs, I got to get a degree, because you can't get ahead without a degree. And so I'm going $200,000 to get a degree in left-handed puppetry, and it'll all work out.
Yeah.
It's the same kind of, it becomes illogical because you're assigned a value to something that it doesn't have.
That's right.
Home ownership is good. It's not all good when you do it wrong. It's all bad. And, don't do this. That's why they call them brokers. Broker and broker and broker. That's what you're going to be. Don't do this. Don't do this. And so I'm sorry if I disappointed your realtor or your builder, but they shouldn't have told you to buy this house. A person with ethics would look at a young married couple and go, honey, you can't afford this. You don't need to do this.
Yeah.
And instead, they're just trying to get a commission.
Yeah.
So
it will be more painful to get this house and have to let it go in 2 years. You know what I'm saying? Than to say no now.
Foreclosed on.
Yeah.
But it puts strain on your relationship. It puts strain on your career decisions going forward. It puts strain on everything. You do not have margin in this deal.
And then you start to resent the house because it's got you locked down. Yeah, it's not good.
Well,
it's not good.
Maybe she resents him for talking her into the house.
Or he resents her for saying, I want, I need. Remember, I need, I want. Remember that from,
oh, yeah.
What about Bob?
That was it. That was it. That was the movie. Wow, look at your callback. Look at that. I want, I need.
I knew you'd get that.
Good old movie. Richard Dreyfuss, Bill Murray.
That's right.
This is The Ramsey Show. If anyone depends on your income, you need affordable term life. Never cash value insurance. Visit Xander.com today for quotes.